You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's blog gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/blogs today to sign up for regular updates via email. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-interesting Options Insider Radio Network. If you're new to Vol Views, first off, welcome. Secondly, you missed a few years, half a decade or so, so you got a lot to catch up on. The easiest place to do all that, of course, the mothership, the flagship, theoptionsinsider.com, or wherever you find your favorite podcast. Make sure if you're listening to Vol Views, make sure you get the full kit and caboodle, and you click the tab to subscribe there on the old Options Insider Radio Network full feed. You get all the shows. You get Option Block, you get TWIFO, you get all the good stuff, the news rundown, everything we produce on a pretty much daily basis here on the old network. You can get it all. Keep yourself occupied no matter what you're doing, commuting, working out, just listening at your desk, whatever you choose to do with it. We don't judge, just as long as you listen. And, of course, for you hardcores, you super vol crazies out there, we also do the show live every Friday, noon Central, 1 p.m. Eastern, via Mixlr, Mixlr. You can grab that link, run with it pretty much wherever you see it. Usually on our social media is the easiest place to find it. Once you see it once, bookmark it, set it and forget it, or if you want to, you can follow us in Mixlr there. You'll be notified the second we go live, and every Friday it's usually a content palooza. We do this for an hour, and then we come back for another hour of TWIFO a little bit after this. You get a couple of hours worth of live streaming goodness over here every Friday. And, of course, however you listen, live after the fact via Tin Can and a String, hit us up. Questions, comments, insights. We do, yes we do, love to hear from you guys. And joining me on the old program today, let's go in order of distance again. I think once again he's holding down the distance flag. He is one day in the future Dr. VIX. Right now we'll call him Russell Rhodes, the guy over there at the CBOE. Mr. Rhodes, welcome back to the program, sir.
Hello.
Uh-oh, you've been in London too long. You're starting to sound a little cockney there, sir.
Out like that.
Hello, Governor.
Hello, Governor. So, thrilled to be talking to you guys. Have I spoken to you from London before?
Well, yes, you have. I'm pretty sure you have. I think the last, I think you have. You were in London and went to Tel Aviv. I'm pretty sure you did. Well, we always had Krakow. There's always Krakow, as they say, right?
I put sticky notes on my on the mirror in my bathroom that says "You are in London," so I know where I'm at in the mornings.
That's always a handy thing to have going. If there is that just proves, listeners, that there is a volatility community out there. Mr. Rhodes will find it. It could be in a financial mecca like London, or in a smaller area like Krakow, or perhaps Tel Aviv, or even in the vast wilderness that is Kamloops. If there is someone out there who wants to talk about VIX, Mr. Rhodes will hunt you down and he will come see you, so be forewarned. All right, and also joining us a little bit closer to home. Of course, you never really know where this guy is. He could be on a bus, could be on a train, could be in a hole in the ground somewhere, hiding out from Fallout and Rocket Man. You never know. He is the Greasy Meatball, Mr. Mark Sebastian. Mr. Meatball, where are you coming from today?
I am here in our world headquarters in beautiful downtown Chicago.
It is beautiful, almost 90 degrees today. Crazy cakes. Little Indian summer, global warming. They get fires in the west. They get horrible hurricanes in the southeast. We get 75 degrees in February and about 90 in September. So I guess to each their own. Meanwhile, let's keep on rolling right on into the trading block. Actually, wrong show. This would be Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review. Like the man said, this is the portion of the show where, surprise, surprise, we review some volatility. And there has been a little bit this week. Downside movement of vol does count as vol. People don't think of it that way, but it does. And we have seen some nice downside movements. In fact, some might say extremely precise, coordinated quite well with my crystal ball pick of about 9.8. We're hovering right about 9.92 right now. I remember last week I was kind of hemming and hawing between a 9.8 and a 9.85. And if I had just gone that little bit higher, how much closer it would be. But then that close, you're just shaving off hairs because it's so close already. Of course, we still have an hour to go, so we'll never. Who knows what can happen, what Rocket Man or his counterpart here could get up to, or some other crazy thing could develop. We've seen it happen before. Witnessed the Hillary investigation during the shows or the NASDAQ sell-off a few months ago. We've seen these things come out of nowhere and shoot vol in one direction or the other over the course of the show. So an hour is an eternity, but right now looking pretty good. And of course, most of the rest of the market pretty much can't really make up its mind what it wants to do. Most of them settling on slightly unched or to the downside. That's pretty much what we got, whereas VIX Cash has been flirting with some epic, some might say historic lows. Mr. Rhodes, I'm sure, will be happy to weigh in on exactly where the recent low, I believe it hit 9.54 yesterday, VIX Cash on Thursday. So where that weighs in on the Paleolithic timeline, that is VIX. But that said, very historic. I think it goes back to about the early 90s is the number. I heard Mr. VIX, though, someday Dr. VIX, I'm sure he has the official proclamation on that front. And of course, VIX kind of moving a little bit, so VVIX still mildly elevated right around the low 90s, 92 as of last check. And of course, we keep looking eyeball on all things Skew as well. And the Skew index pretty much coming off a little bit from last week. It was about getting into the low 140s, starting to make some people maybe a little bit nervous. I think 150 is usually the demarcation out there. People start to say, hey, maybe there's something afoot out here we need to take a look at. This week, dialing it back a little bit off, about 5 handles back down to about 137, almost 138. So kind of interesting time to be in the market, as we've said pretty much all of 2017. It would seem on the surface that there are a lot of potential drivers for volatility. Of course, we have this endless procession of hurricanes out there in the Atlantic. Thankfully, these latter ones don't seem to be aiming towards the mainland U.S., or at least from a U.S.-centric perspective. They have not been as damaging as feared, so that, of course, playing into the low vol. But then, of course, we have this endless back and forth between North Korea and the U.S. That apparently seems to be doing naught as well. So interesting stuff. Let's go back out to London, because who knows how long he's going to be awake on us, so let's get him on. Mr. Rhodes, it's been a crazy week. First off, before we even get into that, what were you doing out in London this week? I know you had risk management a week or two ago, but what were you doing this week? And then what do you make of this kind of crazy week for vol? How do you say mute button in British? Mute button, governor.
I hit it twice.
There you go.
I thought I had to hit it harder. Where have I been? Where did I speak to you from last week? Tel Aviv?
Tel Aviv.
Yes.
Okay. So I did a VIX event there, which went particularly well. I spoke to institutional traders, investors, and whatnot in Amsterdam at the ABN headquarters, and then I spoke to a very similar group at the British Telecom headquarters last night. about all things VIX, and it basically took questions until the wee hours of the morning about all things VIX as well. It's just amazing the amount of interest that VIX gets globally now, because it really, the next closest market as far as activity goes is V stocks, but it's really on a notional basis, because a VStoxx future is worth about a tenth the size of a VIX future. For institutions, VIX is about the only game in town still. So nice turnouts, lots of great discussions, and a 2-page list of things to work on when I get back home.
Interesting stuff. Yeah, the volatility communities. If you're out there, let Mr. Rhodes know, or maybe you don't even have to. That his volatility radar will come up and he will find you. That said, Mr. Rhodes, what about this week's kind of crazy, somewhat, maybe some might say surprising, or others who've been watching the game for a while, perhaps not so much? Where do you fall on the surprising scale for this week's action?
My surprising scale is pretty high. Just and this is the question that I got multiple times, either as I was standing on the stage or off to the side when things were done. With all the political and social volatility that there is in the world, why is VIX so low? And my response is because realized volatility in the stock market is low as well. Taking it a little bit further, and what I got a lot of consensus on was when the U.S. government really isn't getting a whole lot accomplished, that's actually good for the financial markets, and that's kind of where we're at. So as long as it looks like, even though an excuse for the stock market has been, well, they're going to get tax reform or they're going to get healthcare reform, the fact that nothing dramatic is coming down the pipeline, I actually think is good for business, because they can concentrate on business. And I've heard a lot of arguments over here for the current environment to last another year or two. Imagine that.
So you sound like you're echoing Mr. Sebastian's cohort there, the rock lobster, the diehard Maine libertarian, who, if they're fighting amongst themselves over there in D.C., they can't mess up everything else. There certainly is a contingent out there that shares that viewpoint. Mr. Meatball, are you sharing that viewpoint with your diehard cohort there? And what was catching your eye in this somewhat weird week for vol?
Yeah, it was a really weird week. We've seen. It's interesting if you just track kind of the VIX future itself. They've done nothing all week. I think the October future. Here, let me pull up the October future here. So I'm looking at the October future, and I'm looking at a chart, and its week's range is from the 18th. The high, it opened 1270, the high was 1290, the low 1220, and the low, that is the low and high for the week. Since Thursday, its high is like 1285, and its low is 1230 or 1224. So it's been just doing nothing. Meanwhile, the VIX itself off nicely this week. It went from, call it really 10, we closed 1017 on Friday, and here we are at 1006. So it's done nothing either. So we've literally just sat here, spun wheels, and markets have done nothing. Kind of fascinating. And the other piece is the spread. I think we talked about this yesterday, but 2.5 points with 25 days to go. Yes, the VIX is 10, but 2.5 points is a really, really wide spread for the cash index relative to the future. I mean, it's just unusually wide, but it's been persistently kind of that way for the last 2 months. It doesn't seem to want to give up anything until the last week or so.
Yeah, it's kind of weird. We're noting coming into this morning, it was about a 3-point spread and nearly 4 out to the second month to the cash. A lot of that, of course, with the the drubbing we saw. We talked about this many times on the show. The drubbing we saw in the cash versus the futures. They're a little more reticent to crush that vol out there in the futures side. We also talked a little bit. I think it was on Option Block this week about some of the SPX overwriting, contributing to some of what we're seeing out there in the VIX Cash versus the futures being a little bit of a different beast, hence some of that chasm persisting out there. Speaking of persisting, the New York Times, a lot of people hitting us up about this. New York Times persisting in being a bastion of volatility. Clearly an editor out there or a writer or maybe both in combo have decided all of a sudden we want to write about options again, and we're going to do it about VIX pretty much every week. They're trying to vie with Bloomberg and other outlets now for being the source for commentary on all things VIX. So this week, last week, I think a couple weeks ago, they had a target manager who was selling VIX. Obviously, they got the call, or I'm guessing maybe our friend Chris Cole reached out to them to talk about the other side of the coin, which is buying some VIX, because that's what Chris has been known to do. Chris, of course, of Artemis Capital, been on the show multiple times, most recently about a year or two ago when he's never been shy of making some quotes, and he was running with this VIX moral hazard argument out there with the Fed and doing all their quantitative easing. It was a moral hazard. Chris, of course, maybe leaning on the VIX explosion side of the fence, so he likes things to be a little bit more turbulent, a little bit more topsy-turvy. Folks like Zero Hedge and others like to run with his quotes. So New York Times being a little bit more staid outlet for his views. Chris, I'll have to get Chris on to express his viewpoints here. He says, optically, volatility still very low, but the fear is increasing. In this article here on the Times, and I like how they term it. How can they describe his hedge fund in the Times? They say he runs a hedge fund that makes bets on various forms of a financial apocalypse. And they say he opened Artemis obviously about 2012, and he's grown it. According to this, he's grown it pretty substantially from about $1 million to about $200 million, and he's wagering pretty heavily on, like a lot of the strategies we've said earlier. They don't outline exactly what his strategy is. I'm sure the reporter probably maybe wouldn't understand it if he did outline it, because he probably uses some interesting strategies. But we've had Chris on before. He's kind of a mix of the futures and the upside on the options. And he's looking for a spike. So a little bit of a contravailing opinion out here, given how everyone and their mother, including target managers, seem to be just crushing VIX all day long. Chris seems to have drawn a following and amassed some AUM. Trying to bet on the others. I'd like to ask him what he's been doing in this interim while, the long VIX strategy has kind of been bleeding. It's been a rough road to hoe, so maybe we'll have to get him on and see what he has been up to. He estimates here in this article the $1.5 trillion in investor dollars betting on the other side from him, betting on, as we've said before, term it what you will, the short VIX, the crowded trade, the volatility feedback loop, call it what you will, has been called many things. But interesting stuff. We haven't had Chris on in a while. We'll have to get him back on. But what do you, Mr. Rhodes? He's kind of speaking your language. He's saying, we're overdue for a little bit of upside. I'm guessing if we brought him on right now and had him guess in the crystal ball, he might even trump you.
It depends on the time frame. He would probably, knowing Chris and being a big fan and admirer, first off, I would never want to take the other side of that guy. I feel like he's got a feel for our market that goes beyond most of us. However, I have a funny feeling that what he's doing involves being set up for a volatility spike, let's say in the next couple of months, and not necessarily between now and next Friday. You know what I mean?
Yeah.
So
yeah, he mentioned
I can just hear the response if we forced him into the crystal ball, which would be something like, well, we could go up to 16, 17, 18, blah, 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 but, odds are we're going to be right where we are, even after having an article talking about him preparing for a big spike in volatility.
Yeah, a big thesis of his argument in this article is that he's looking at vol beyond the 30-day window. It's kind of an issue he has with VIX. VIX is the 30-day, obviously, prognostication of S&P vol, and he's looking beyond that for vol a little bit longer term. So that's hence why he says it hasn't materialized yet. Mr. Meatball, do you agree with this? And you guys taking that same line over there at Carmen Line Capital?
Yeah, it's interesting that he's kind of had this long vol. He had a very well publicized letter that circled on Zero Hedge last year that basically sounded the apocalypse. And, the apocalypse will come someday. The end of the world will happen, but we just don't know when. And, you've got to, the one thing I'll say about Chris is my guess is he's come up with some smart ways to be long vol. And it's probably more back spready where he may have some carry may not just be in a position where he's just, going long calls, long futures and the like. I would be actually shocked if he wasn't collecting carry while he's running this fund that has long exposure, because he's just too smart to sit there and think, long VIX futures is a winning strategy. So there's no way he'd be raising that much cash if that was his approach. So my guess is that this New York Times article is probably missing a little bit of his nuance, would be at a minimum.
No, I refuse to believe that, sir, that an outlet that has written about derivatives probably twice in the last decade until the last few months suddenly can understand all the nuances of a volatility strategy like that. And you're right, there's no way he's just sitting there long the 20s or long the 30s and just praying. Chris, a little savvier than that. And you're right, he did have that it was the VIX moral hazard article about a year or so ago that really got a lot of people up in an uproar. He was trying to get to gin up the VIX apocalypse back then. Didn't really work. We'll see if round 2 here with New York Times can shake things a little bit loose. Speaking of shaking things loose, someday Dr. VIX, always the man to go to with the data, and that 9.54 we mentioned earlier that VIX Cash hit this week. 15th lowest VIX print here on record. So that's worthy enough for all you guys who like your historic VIX prints. The interesting thing, though, 5th month in a row where we broke in 10 handle in a VIX intraday. That has never happened before. So like these consecutive hurricanes coming out of nowhere, never really happening before, maybe we're seeing some global warming trends here in VIX. We're setting new records, crazy things going on out there in VIX land. For all of you who like to talk all things historic. Speaking of historic, before we get into the options and everything else, all of you out there saying, wow, VIX is so low, where can I go for some vol? One place you may want to think about is the old nifty VIX, the India VIX. They're getting a little bit of a sell-off over there in India, driven by some domestic concerns, as well as, of course, the ongoing back and forth between Rocket Man and Mr. Trump, not exactly helping things over there either. So we're seeing a pretty sharp sell-off over there and a pretty aggressive jump over there in the India VIX. It's up to about 12.5. Some people over there who are India VIX watchers saying that's starting to get into maybe some bear market concern territory. So we don't talk India VIX as much. Usually, people here in the U.S. seem to think the 20 handle, depending on who you talk to, maybe 25, maybe 30 on the upside is really where you start getting into those scary times. But usually it seems like 20 is a good demarcation. Maybe 12.5 is that level in India. And actually right now they're at about 12.97. So they're half a handle higher than that. So if you're looking for a little vol, a little juice, perhaps the India VIX is the place to look about it. I know that's one of the VIX licensors that probably does the most paper outside of the U.S. Russell for the CBOE. But we don't talk about it a lot, but getting a little bit of love over there. You guys got any plans to hit Mumbai in the near future?
I did that when they launched the India VIX. I did a roadshow with the National Stock Exchange of India, which is kind of like their NASDAQ. The Mumbai Stock Exchange is the older one. But when I did it was about 4 years ago, and when I did the road show, it was actually when they were getting ready to have their election. And regardless of what was going on in the world with the Nifty 50, the India VIX was working its way higher from day to day, and I believe it peaked out at 50 or so back then. So when you just threw that 1281 out there, I was kind of shocked to hear that number, because I remember it being a 20 to 30 type number. I didn't realize that low volatility had worked its way all the way over there. I knew it was in the mid-20s when I looked at it last fall for something that somebody had asked me about. So 1281, I don't know if that's bear market territory for the India, or they're calling it the NVIX now. They called it the IVIX when I was over there. I just don't know if that counts as bear market territory quite yet.
That seemed a little low to me as well, but far be it from us here to second guess these domestic Indian specialists. We think about with analysts here in the U.S., but some people over there deeming that to be bear market territory, probably talking up a little bit of their book as well. But I'm kind of with you. I have recalled this being a lot higher not so long ago. Speaking of things that were pretty active not so long ago, about a week ago, we brought on this crazy guy from Tel Aviv, and he gave us a weekly options rundown. Let's see if he can do it again. This time from London. It's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, everybody. You guys know the drill. It's time for Mr. Rhodes to do a rundown. Should be a fun one this week because it's happy hour time over there in London. So who knows what he's been up to? Maybe doing this segment with a beverage in his hand. So, Mr. Rhodes, what have you, sir? And can you stay lucid through the whole segment?
Well, let's clear things up. First off, I haven't had a beverage in my hand in over 7 years. So the goofiness is not ever attributed to that.
Oh, that's just you then. Oh, okay. I apologize.
I know. So Monday was the heavy day once again, which is always kind of the pattern. There were a handful of really complex looking trades using weeklies that I could not get a handle on from over here. So we may do a couple of weeks of review after I get back next week because I got to go down to the pit and talk to some people. Monday, there was somebody buying 100 of the September 27th 17 puts for $6.18 and selling 100 of the 10 puts for 18 cents. They paid $6 for that spread. If they hold it through September 27th expiration, which is next Wednesday morning, they make money as long as we are under 11, which we were well under 11 for this past week's VIX expiration, which was the standard September expiration. Saw a couple of calendar type spreads that might have been rolling transactions on Monday. Somebody bought some September 20th 10 calls for 74 cents, sold the following week's 10 strike calls for $1.12 and paid out 36 cents for that. Saw somebody sell the 12 strike puts that expired this past Wednesday for $1.44 and buy the 12.5 puts that expire on the 27th, and they paid 40 cents for that. I just wonder if they're getting out on Monday before expiration after we get through the weekend, or if that's a common trade that's going on. Another one that was really kind of interesting to me, and I'm wondering if they held this through expiration or not. Somebody bought the, and Mark Sebastian just sent me a note on a trade that I'm aware of. I'll get to that one in a sec, Mark. That's something that happened, I guess, yesterday. Today. So, and I did the math on that using the Excel spreadsheet. But back to Monday. Somebody bought some of the 29 puts that expired this last week for $18.39 and sold some of the October 11th 29 strike puts for $16.99. They had a cost of $1.40 for this, but with VRO coming in Wednesday morning at 9.87, that means those 29 strike puts that look like they were open actually yielded them $19.13. So it looks like a good rolling transaction there. We start to get into Tuesday and Thursday, or I don't have anything for Wednesday. We get into Tuesday because really it does really seem like from my consistent experience at being prepared for this program that most of the weekly's activity seems to occur on Mondays. Tuesday, we had somebody sell some October. I think this is a sell stupid. It looks like they sold the October 25th 15 calls for 70 cents and the 16 calls for 62 cents. And they did this about 4,000 times. Usually when we talk about stupids, they're buying. I don't know if selling options counts as a stupid or not. But I saw a few trades like this that came to about 4,000 times. Nothing on Wednesday that I can report. There was a 1x2 using the September 27th options, and I couldn't tell which side they were buying and which side they were selling without a visit to the pit, which was kind of difficult from Amsterdam. So I skipped on that one. Thursday, we had somebody buy, and I like this trade. They bought the September 27th 9.5 calls for $1.18 and sold the 10 calls for 80 cents. They paid 38 cents. And if we get settlement above 10 next week, they yield a profit of 12 cents. Now, I kind of like this one because the settlement that we just got, which is one of the lowest ones as of late, was 9.87, which would be a penny loss on this trade. They repeated this trade for a 39-cent cost later on Thursday, and this morning it looks like they nailed one for just paying 30 cents for it. I don't know if it's the same person, somebody tracking them or what, but kind of an interesting trade where they're just buying the 9.5 call, selling the 10 call, doing it for less than 40 cents. 30 cents later yesterday, 39 cents as well, anywhere in the 30s. And you got something that'll be worth 50 cents as long as you get a settlement above 10, which it wouldn't take much for that to happen. Today, before we get to the really complex trade that I had to do math for, somebody bought some October 25th 11 calls for 204, sold the 14 calls that expire on 10/25 for 99 cents, paid $1.05 for an 11/14 call spread, and then here's the complex one. We had somebody buy. I've got a little bit different number than Mark Sebastian put up here. I got somebody that bought 51,871 of the October 4th 21 calls, paid 10 cents for those, and turned around and sold 8,202 of the October 25th 16 calls for 65 cents. They did this trade for a net credit of $25,000. They bought about 52,000 of the October 4th 21 calls for a dime and sold about 8,200 of the October 25th 16 calls for 65 cents. Those numbers don't divide evenly, but you get a net credit of around $25,000.
Kind of interested in whether at least one side of it was closing. There's the OC4s clearly opening. There's only 4,100 open interest on that strike, and versus 52,000. But the OC25s, I feel like we saw a similar trade like this last week or the week before.
We did.
Yeah,
we had another one that I had to do math on.
Yeah, and so then you've got there's 29,000 open interest on the OC25 16 calls though. So I'm wondering whether this was like a partial close and rebalance, or whether it was either side was opening. I actually reached out to my brokers, and the trader that put it up would not say whether it was opening or closing.
Wow.
So we had to wait till tomorrow. Jerk.
Close. What a nice fellow. The volatility community. Volatility community is so willing to share. That's what a surprise. But interesting, Mr. Rowe. We'll have to send you on the road more often. You're able to get a good handle on all things VIX Weekly from across the pond. So well done, sir. Good stuff. Interesting of note, by the way, a couple of things. Obviously, that one spread we just talked about, but also the stupids. You don't really see a lot of stupids, let alone going on the side you mentioned, in VIX land that often. It just does not seem to be a trade, I think, for a variety of reasons. My opinions on stupids are well documented. I won't get into those again here, but it does not seem to be a trade that resonates too much with the VIX crowd yet for whatever reason. Seeing a size 1 this week in the weeklies. Did that surprise you, sir, as it did me?
It did. It absolutely did. It was a little bit of head scratching, a lot of double checking before I went on record with this thing, but that appears to be what it was.
I don't know. Mr. Meatball likes to argue you can use some stupids for delta adjustment. And there certainly is something to that. I think maybe less of an argument for that in VIX land. We won't rehash the great stupid debate here. Just that one really stuck out to me as kind of odd. Speaking of odd, let's get into the hot, the action, the weird, the hot VIX strikes, the big options, lighting it up. Top 10 here for the week in terms of the big position, what people really are slinging out there. And once again, the OC25 is just maintaining a chokehold on the hot VIX options list. Over 700,000 open on that strike now. 716 to be precise. I know I've said it before, but now you really could. You could add up, 20 or 30 of other pick'em names out there in the options world, and their total OI probably wouldn't add up to this one strike. So just a serious paper open in the OC25s. Again, that was part of that size risk reversal with the kicker we saw go up about a month or so ago. And that's pretty much been dominant. In fact, I believe the top three open positions are all still legacy remnants of that trade. Number 2, the OC15s, also part of that, with about just a couple hundred contracts shy of 500,000 open on that strike. So you add up the top 2, you're talking 1.2 million contracts open. Just a ton of paper out there. Number 3, just a little bit less, 495 open for the OC12 puts. So those, if you recall, listeners, are the 3 strikes of that size risk reversal. And those 3 strikes still dominating the list. The top three all come in there. Then we fall off a little bit to number 4, the OC 20s, 332,000. Again, by the way, these are all pretty much OC 18th regular OC, no weeklies sneaking in there, anything like that. Number 5, the OC 18s, 323,000. We get in the bottom half of the top 10 here. Number 6, we fall off a little bit again. 185,000 open for the OC 17s. Number 7, the OC 22s, about 182. Number 8, the OC 21s with about 182 as well. So just a couple hundred contracts separating. Number 7, number 8. Number 9, the second put on the list, the OC 19 put. The only put, well, the second put, I should say, the first put on this list that isn't tied to that crazy risk reversal. 171,000 open there. And round out the top 10, another put. 3 puts on the list. Been a while since we've seen that. Maybe perhaps reflecting a bit of a sign of the times for what we're seeing out there in VIX land these days. Just a tick under 170,000 of the OC 11 puts. Total open interest coming off a little bit, not surprisingly, 9.96 million open, about 7.8 on the calls and about 2.16 on the puts. Also looking back at the week that was out there, a fairly active week. ADV still strong. It's getting stronger. 845,000 now a day, which is just an impressive number, however you carve it up. And the rest of the week, pretty active. Yesterday, kind of light, 560 on the tape yesterday. 789 on Wednesday. Tuesday, 1.2 million. And Monday, the big day, nearly 1.6 million out there. So getting up there, not quite at historic level, but getting up there for VIX land. I do believe VIX has put up over 2 million in the past. Today on track for about 440, so about a little more than halfway through the ADV, a little bit more than halfway through the day. So we'll see if we make that ADV. It doesn't look like it today, but we shall see. Overall, VIX called to put. I don't know, Mr. Rhodes may be getting a little bit nervous. 3.6 to 1 calls over puts. I know Mr. Rhodes starts to get a little queasy once it gets north of 3. So he's been queasy for a while, but go figure. That's pretty much just his regular condition. Mr. Meatball, we talked about that bit of a funky ratio spread that went up, I think, today here in good old VIX land. Anything else catching your eye out here? And do you have thoughts on the efficacy of stupids in VIX land?
Well, I do. I don't think they make sense because there's no real underlying. Stupids make a lot of sense if you have a real underlying position.
Exactly. There's no reason to adjust in VIX land.
They don't make as much sense. Biggest trades of the day so far today are the October 14-18 call spread. It's been purchased for about 32,000 times, paying 42 cents. There is a backspread trader in October. He is a buyer of the 17, seller of the 21s, 1 by 2. He is selling 2, buying 1, and paying 7 cents for that spread. That's gone up a few thousand times. Buyer of the OC 19s today. Lots and lots. Oh, you know what? This is a big one that's gone up multiple times. There's a customer that has sold, I want to say, close to 25,000 of the October 22-35 call spreads, collecting 17 cents. Your guess is as good as mine as how he came up with those strikes, why he wants to sell that. But that is definitely one that has gone up in bulk today. Final thing was we saw a OC Nov risk reversal swap. So the customer bought the OC 12 put, sold the 15-20 call spread, then sold the November 11.5 put and bought the 15-20 call spread in a collar swap. Was trying to pay 55 cents, had 6,600 to do. That is an actual hedge, that tells me. And that was kind of the bulk of things that we've seen. 50 cent was around earlier. We've seen the OC 19s go up for some size, and but there's been a lot of hedging activity going up, and I've been trying to figure out these futures. Best I can tell is, we haven't talked about this. There was an article on Monday that came out that talked about how much short Vega was in the marketplace. I forget where I read it.
Is it by your buddy Bill Valentine? He likes to write about that kind of thing.
Yeah. There was a ton. Because I think our friend D. Matthew Thompson retweeted it. And, I'm wondering whether that came out, and now part of the reason futures have been so stiff is you've got a slow unwind of the short Vega exposure in VIX land among kind of XIV and UVXY, or XIV and SVXY.
In the article with Chris, he calculates it as 1.5 trillion. Effectively on the other side against him, so maybe somewhere in that ballpark.
High.
That seems a little rich, but hey, Chris has never been afraid of making, shall we say, grandiose comments about the world of volatility, including things like moral hazard and all sorts of other. We'll bring Chris on and let him fend for himself on here. But yeah, either way, it is sizable. I bet you if we had Bill Valentine on, he probably would have a number at hand because he's into tracking that trade. Speaking of tracking things, it has been interesting out there. You guys like yourselves some good old VXX, and VXX a little bit in rally mode today, up about 1% after having, kind of drifted lower. It was we talked about the reverse split many times. A few weeks ago, it was trading in the mid-40s. It's kind of drifted down to the low 40s and now getting a little bit of love again back out there. Interesting stuff to watch how this prints. Of course, hopefully you guys have been trading up out there on your puts as a result. I know, just judging by your listener mail, you guys were extremely interested in all things to do with VXX puts and put spreads and duration and time frame and everything else like that. Also worthy of note, we'll get into this more if you're into the commodity space, but oil vol kind of trending a little bit back pretty much exactly almost where it was last week after having a little bit of time, actually off a little bit now. You can look at a lot of different ways. OVX, of course, the VIX for USO, OIV, the VIX for WTI. We tend to lean towards the latter more on shows like TWIFO. Again, tune in 1:30. You can hear us talk about that more, including breaking down the Skew in places like WTI and indeed out there in things like the SPX and Russell and everything else in S&P, E-minis, all sorts of fun stuff going on out there. Speaking of fun stuff, it's always fun when we bring you guys onto the show. So let's do it. Let's bust open our volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL, posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. Like the man said, this is the portion of the show where you guys take the reins. Tell us what you want to talk about. Once in a while, we get to ask you guys some questions as well. We have asked you guys this week about the EFX insider trading. You guys are weighing in on that left, right, and central. We won't get into that on this show, but let's just say 75% of you right now feeling like our friend there perhaps made a bit of a dubious trade out there, cashing in those options right before the big reveal of the fact that they had allowed effectively half of the country to have identity theft. So interesting stuff there. No pity, no sympathy for him in our audience. Moving on to the other question we have for this week, which is, everyone's lamenting, everyone's wringing their hands. Oh no, there's no VIX, there's no vol. Where can I go? Where can I go to get my premium? Where can I go to get my index juice? So we asked you that question. VIX back in single digits. Again, we mentioned earlier, top of the show, historic levels, 5 times below the 10 handle, historic times here. So where are you looking? If you're not looking at VIX, where are you looking to get your index vol fix these days? You going to go Russell? You can go your RVX, you can go your IWM, you can go your, individual Russell E-minis that they just brought back over there at CME. It seemed to be printing up a storm over there. You can go Dow. Yeah, you can go a bunch of different ways. DJ, your old Dow option. You can even go look at, you can't really sling it, but you can look at your old, your VIX for the Dow out there. A NASDAQ, you go Qs, VXN, whatever your poison is of interest of note. Or are you sticking around VIX land? You're going to buy, you buying what Chris Cole is selling. You're buying VIX for a rebound. Let's start with you, Mr. Someday Dr. VIX. What do you think is winning our poll? You think people are going elsewhere for some vol, or are they buying VIX for the old rebound?
But there was another choice, which I was thinking NASDAQ VIX, since that's where we've gotten a couple of our surprises lately. So that's what I would go with, without cheating.
Interesting. NASDAQ, a good choice. You're right. They have had some vol surprises of late, so that's something certainly to watch. And you think that's winning our? I think that's winning our poll as well. I take it.
Yeah, because I think everybody's just as smart as I am.
There you go. You can always tell a genius. He thinks exactly like you, Mr. Meatball. What are you feeling? And more importantly, what do you think our audience is feeling here?
I'm going to go out and say the audience is feeling VIX. I agree with Russell. I mean, the NASDAQ VIX should be Apple has been getting obliterated. The reason why the S&P is down today, and the Dow and the NASDAQ, is because of Apple getting absolutely throttled the last week. So that would be where I think we've got the most potential, kind of a FANG unwind. But I think people are probably buying the VIX rebound. Oh, and here's the article that I was citing earlier. So it was from our friends at Macro Risk Advisors, MRA. Earlier in the week, they estimated the rebalance of a 2-point VIX move to be 85,000 VIX contracts that would have to be bought. It has come off by about 5,000 contracts this week. It's down to about, I just spoke to them. My friend Brian, we'll have to get Brian on, Brian Beer. It's come off to about 80,000 contracts, a little bit. So that could be a little piece of what's been holding up the VIX and been holding up VIX futures, is that there is a little bit of an unwind there.
They're not the ones who said VIX is going to be 60 by Halloween. That wasn't them, right?
I don't think so. They're the ones that handed out those awesome baseball cards with guys that blew out.
Oh, yeah.
Those were
remember
awesome.
those things? Those things were incredible. They really were.
Yes, I do. I know I see they put out stuff a lot. I have seen their stuff. It's sometimes it's hard to tell one VIX prognosticator / analyst / researcher from another. It's getting to be a crowded field on that side of the space as well, let alone the trade. But I don't think they are. I'll have to check to make sure that they were not the, shall we say, the outlandish folks out there predicting VIX of 60 by Halloween. Let's see what our outlandish audience is thinking. We still got the rest of the day to vote here if you haven't, listeners. If you're listening after the fact, sorry, you're out of luck. You missed this one. But looks like our audience is buying some VIX. So they're buying what Chris Cole has been selling to the tune of 69%. Pretty whopping out there. 26% coming in for the old Russell 2000. So getting a little love there. You know, small cap vol should be structurally more interesting, more active, more rich than S&P. So could be something there. Only 5% coming in for the NASDAQ. I was a little surprised at that as well, given the fact that just recent precedent showed us that NASDAQ has the tendency to surprise sometimes. So interesting. We'll see how that evolves over the rest of the day. Meanwhile, let's get some other questions. Swatcat. I like that handle. That's a good one. Swatcat wants to know, which instruments are there that are very liquid if you go long VIX? If you're going long VIX, I'm guessing English not his first language. I found one so far, ticker VIXY. Good old VIXY. If you're not familiar with this one, listeners, this is the ProShares VIX short-term futures ETF, printing around 34 and a quarter right now, up about a quarter on the day. He says he's Nordic as well, so maybe that's why the English. But we get what you're selling. We get what you're putting down here, Mr. Swatcat. He doesn't say why. Obviously, if you're looking for a liquid instrument to go long VIX, I just outlined how much is open on some of these strikes in VIX options. And again, I don't talk the rundown for the open interest in VIX futures, but there's size there as well. You don't say why you want or don't want to go that route. That would certainly be the most liquid way you could go, and probably the one I think most of us would recommend first. Why you want to go VIXY, you don't say. But yeah, outside, I guess let's leave the caveat then that VIX futures and options are there. He doesn't want those. He likes VIXY. I don't know, Mr. No accounting for taste in the vol space. Mr. Rhodes, what do you have to say for Mr. Swatcat? He likes himself some VIXY.
Well, I understand that. That's the ETF, you know?
Mm-hmm.
And I can totally understand why you might want the VIXY instead of the VXX. So I cannot argue too much with that one. And the other thing, there are people that do what the three of us do as far as the talking part of what we do, who, if you don't do things their way, they tell you you're doing things wrong. I personally would not, the long volatility, I usually want to try to get that from somewhere other than the ETPs. I think the short ones are great to work with, or a short, option position in some of the long ones. But if he loves his VIXY and he times it right, he's going to be very happy with his VIXY.
Yeah, if you get long when these are in backwardation, then it can absolutely work.
Yeah,
that's about that. They're great for long vol when when vol's going up. They just are really ineffective for setting up hedges beyond a day or two.
Just bear in mind, he wants liquidity, and the ADV in VIXY 625 contracts. Now, far be it from me to ever recommend VXX. I would not do that, but liquidity-wise, ADV out there, about 350,000 contracts a day. So a little bit of a different beast. He mentions he wants things that are very liquid. I don't know how he equates that to VIXY, but c'est la vie. To each their own. I would recommend others for liquidity outside of VIXY, but hey, pick your poison. If you're okay with these are fairly wide markets. I'm pulling up right now because it only does 600 contracts a day. If you're okay with the inherent cost of getting in and getting out there, yeah, then go for it. It's just, there's going to be a cost, so be aware of that. Let's see what else we got here. Long one here. Oh, this is an interesting one here. This comes from TicTac. I like that handle. TicTac. I think this is what we were talking about last week on the show, Mr. Meatball. He says, you guys said it's not a good time for VIX front spreads. Why not? This is a conversation we've had a few times. Obviously, ratios pretty popular out here in VIX land. We've also talked about sometimes when they're favorable and sometimes when they're not, usually due to the nature of, like we said, the answer to all questions, VIX futures term structure. That said, Mr. Meatball, illuminate our friend here, Mr. TicTac, on why I think you specifically said last week you weren't feeling the front spreads in VIX land.
Well, what I said was I don't feel back spreads because VVIX is so high. I don't think I said now's not a good time for front spreads, although I would generally argue that I'd like to see vol a little higher before, like with a front spread in VIX, the classic play is let VIX pop, put on front spread, let VIX drop right back. That's kind of why, I guess if I said that would be why. But my major point was that back spreads are hard because vol is so high in VIX. The VVIX, despite the VIX being 990, Skew index is steep, VVIX is 93, and VIX futures term structure is super wide. So VIX might be low, meaning there's a lot of people unloading S&P 500 puts, but the VIX complex and out-of-the-money puts are not cheap.
Yeah, I'm assuming, when I first read this, I assumed he meant, back spreads, what we always talk about here on the show. I'm assuming he probably just got a little bit confused that it's easy to do with those arcane terminologies. Just go ratio and people will understand, or perhaps reverse ratio. If you must, we just go, the short 1/2. That always works as well. And people know what you're talking about, but I think I'm 99% sure that's probably what that's certainly what we were talking about. I don't think we were talking front spreads anytime recently on the show, so that's got to be what he was going for. Let's see, we got a bunch of fun ones here running out against it. Let's see. All right, this is the fun one. I'm going to go for this one. We'll go around the horn and give our answers. This comes from I don't know, La Town, LA Town. They want to know, what's our call for the worst vol ETF ever? Interesting. I like this question. There's a lot. This is as subjective as anything else in the vol ETP space because it's so crazy. By the way, I'm going to just assume he means ETP, so notes and everything all kind of lumped in there. But it's hard for me to get past, and we talked about a lot of garbage ones. It's hard for me to get past the old TVIX fiasco that we highlighted a few years ago on the show. I mean, that's a literal example of one of these things just breaking down en masse here on the old network. Yeah, people dialing into the studio here, listeners. There we go. But yeah, it's hard to get past that one. It was such an epic failure, and it's still things still prints, things still does a lot of volume. In fact, ADV out there right now is hovering. If I can get it, my system is going slow for some reason. But yeah, it's still out there, still trading. So crazy stuff. But that's my vote. Mr. Rhodes, I don't know if you can weigh in on this one, but if you can, if you have general 10,000 foot level, go ahead.
I love them all the same.
That's so fun. Aren't you quite the... you can tell you've been at the exchanges for a little bit. You got this. You got the political answers down pat. So I know you guys can't call one or the other. I'll just speak for you. I speak for TVIX. Mr. Meatball, you riding the TVIX train, or you got something else out there?
You know, I'm gonna go with those AccuShares from a few that are that
yes,
that
I totally forgot
over.
about those. Yes, that's a good one too.
They were like, "Oh, we've come up with a way to be VIX," and then it was this weird asinine dividend thing, reverse. I mean, it was just a debacle from the start with the way they handled themselves, and they were gone in, sadly, nice guys. Don't get me wrong, they were nice guys, but it was just an absolute nightmare what they ended up putting together because it just did not work.
I can't believe I forgot about those. Those were so priceless. From, if you want just the, Byzantine. That's the only way you could describe it. Reading that prospectus, I defy anyone to make heads or tails of that prospectus and the ratios of distributions and the dates.
Yeah, it was like crazy.
It was horrifying.
The nuttiest thing I've seen. The TVIX debacle was also a fun one, but at least TVIX you understand what it's doing, and it still trades. It trades. There's over almost 8 million shares have traded today, Mark. I think those accurate shares, guys, in how complex it was, the just utter failure of it, and then the crazy nature in which those. I'll tell you, but in my opinion, the ones that I'm kind of surprised have not really taken off more are VMIN and VMAX. I think those I'm surprised those have not taken off the way some of these other index ETPs have. Yeah,
and they kind of seem to have managed to avoid some of the just Byzantine dance that the other ones had to go through. So there you go, a couple good votes there. I like both of those. I can't believe I totally forgot about those other two, because their prospectus alone has to be just worst, get the award for worst prospectus of all time. Anyone who reads that and then still wants to invest in that product, you have to come see me. All right, we got to keep on rolling though. Into our final segment, it's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, another week, another near bullseye here on the old VIX crystal ball. As we all know, this is the portion of the show where we try to wrestle the just dubious beast that is the VIX Cash. And oh, what a week it was. Coming in, though, I remember us hammering and hawing, 9.8, 9.85, coming in a little bit more juice in the old squeeze, the end of the show, but not much, 9.96 here to close out the show. So my 9.8 looking fairly good out here. In VIX land, that's pretty close to a bullseye out there. Then we had following up in the second half there, Mr. Meatball. That's what you get for going second and splitting the uprights there. You deserve your fate this week, sir. And then, of course, last, Mr. Rhodes, once again. He was buying the Rocket Man. The Rocket Man was not delivering. And you know what? I'm going to go first this week, because I like going first. It's fun. That way I don't have to navigate where you guys are coming in and all that other nonsense. Let's go for this week, like we said, Rocket Man doing his darndest to budge the VIX. Trump helping, but hurricanes also helping, but none of that budging. We've seen just what it takes to systematically, Chris Cole aside, what it takes to really budge the needle here in VIX land. And it is a lot. It is a Herculean effort. So I'm feeling next week that I don't think we will make that effort stick. And I'm going to think we're going to be not that far away from my prediction for this week. I feel we're going to drift a little lower. I'm saying it'll be about 9.75 or so this time next week. We'll go in order of closest next. So you were number 2, Mr. Meatball. What are you feeling for this time next week?
I'm going to say 11.
Oh, you think Rocket Man's going to kick in? You think one of these depressions is going to do some damage?
I think that there's a real potential for some with what we were talking about earlier, with the amount that needs to be kind of covered in the ETPs, that there could be there's potential for some weird breakage in kind of the VIX space for a few days, and I would not be shocked if that happens next week, the way the vol complex is moving around.
Yeah, disassociations are perhaps more of a danger out there these days than they are for the other products. And Mr. Rhodes, last but not least, sir, what are you feeling out there from London?
I'm going with 10-10 just because I like to say 10-10. But I do think we'll get back into the double digits, and I liked those spreads where they seem to be shooting for an above 10 VIX settlement next Wednesday. So I'm rooting for the trades, and I guess if I'm rooting for the trades, I should guess 7, huh?
Yeah, you should be on the other side of that fence. You should be on the historically low side of the fence. 7. That'd be equally as impressive. 10-10. So we got a nice range. Mr. Rhodes kind of carping me a little bit on the upside there, but I will forgive him for that. And unfortunately, listeners, that's all the time we got here for Vol Views. There's my music. Can't close out without my music. But before we go, one last trip around the horn. Let's start with you, Mr. Rhodes. You're London, you're Tel Aviv, you're Amsterdam, you're back to London. What the heck is going on out there in CBOE land for the coming week, sir?
Oh my God! It's the biggest event of the year. It's the Option Pit event. Would not miss it for my life.
Yes, it is indeed the biggest event of the year.
Gonna be a swan song type thing for me, and we'll get into that more next week, won't we?
Yes, we will. We'll be doing it perhaps even live at the old show. And speaking of that show, Mr. Meatball, what do you have up your sleeve for us next week, sir?
You can come see me, Russell, and Mark in Chicago. Wednesday through Friday, our Pro Trader Summit. Russell's doing some fun stuff on VIX. I'm doing some fun stuff on calendars. We're going to do a live option block. We may even slip in a live Vol Views. We'll see. And it's going to be a good time. So get your butts to Chicago, people.
A twofer. You threatening a twofer of live shows? We'll see what we can do. We can do one. Twofer. We'll see. That's a lot of effort. I don't want to overpromise to the people. But if you can make it next Thursday, come see us live there. Definitely for the option block. That'll certainly be fun. You can also see Mr. Rhodes. He'll actually be stateside for the first time in I don't know how long. Quite some time. And, of course, Mr. Meatball. And not the Rock Lobster, unfortunately, but Uncle Mike and a bunch of others. The Cow Guy. Everybody. Check it out over there, optionpit.com. I'll put a link in the show notes as well. And on behalf of Mr. Rhodes and Mr. Sebastian, and indeed myself, I thank all of you out there in the listening audience for downloading, streaming, and subscribing. And, of course, for tuning in live. We love you guys, too. And we'll see you next time for more Volatility Views.
Volatility Views is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's blog gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/blogs today to sign up for regular updates via email.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.